Hello and good morning, everyone. So, today is the last trading session of this week. So, let's get started with today's top stocks and news. But before that, let's understand the performance across the sector. Basically, the financial result indicate a varied performance across different industries, with some sectors showing resilience while others face significant challenges. Basically, this divergence suggests that companies are navigating through different market conditions, basically influenced by factors such as consumer demand, cost pressures, and the competitive dynamics. Along with that, there is a fluctuation in demand because several companies have reported subdued demand conditions, which have impacted the revenue growth as well as the profitability. Basically, this trend highlights the importance of adaptability in business strategies to respond to changing consumer preference and the market trends. Now, let's directly start with the stock specific action for today's trading session. The first one is ITC because there is a strong revenue growth. Basically, ITC reported a robust revenue increase of 16.8%, reflecting the effectiveness of its growth strategies and the product offering. Now, this strong performance is particularly notable in its FMCG segment, suggesting a growing market share and the increased consumer acceptance. Along with that, there is an increase in its cigarette volume. The 3% increase in the cigarette volume, which surpassed the expectation, indicates a stable demand for the tobacco product. Despite ongoing health concern, ITC brand loyalty and the market strategy seem to sustain consumer interest in its offering. The second one which you need to look at is the Kansai narrow leg, because there is the completion of the sale of the land parcel in Lower Parel of worth 726 crores demonstrate the Kansai narrow leg effectiveness asset management. This move not only enhances the liquidity but also allow the company to focus in its core operations, signaling a proactive approach to managing its portfolio. The third one which you need to look at is the Coromandel International, because there is a profit decline. It is like a 12.13% decline in its net profit, highlighting challenges in the agrochemical sector, potentially linked to the fluctuating raw material prices and the competitive pressure. Basically, this drop in the profitability underscores the need for the company to strengthen its operational efficiencies and the cost management strategies. Despite the profit decline, a 6.4% in the revenue indicates that the company is still capturing the market demand, albeit a lower margin. This trend suggests that Coromandel is maintaining its position in the market while navigating the pricing pressure. The third stock which you need to look at is the Patanjali Foods, because the impressive 21.4% increase in its net profit indicates a strong consumer demand for Patanjali edible oil. This growth reflects the brand's success in the appealing to health-conscious consumer, its focus on the organic and the natural products, positioning it well in the competitive landscape as well. Now, the fourth stock which you need to keep on your radar is Mahanagar Gas, because there is a profit decline. Basically, despite an 8.6% increase in the revenue, Mahanagar Gas reported approximately 16.5% decline in its net profit. This suggests that rising operational cost or competitive pricing pressure are impacting their profitability, indicating the need for the company to evaluate its cost structure and the pricing strategies as well. The next one is the PNB Housing Finance, because there is an improved asset quality. Basically, there is a 23% rise in its net profit, coupled with a decline in the gross non-performing asset ratio to 1.24%. Basically, it is signifying the improved asset quality and the effective risk management practices as well. This positive trend basically indicates that PNB Housing Finance is effectively managing its loan portfolio and enhancing its financial stability as well. Now, let's come to the second factor, that is the net interest income growth. The modest growth of 1.2% in the NII suggests that while lending activities are stable, the company may be facing margin pressures as indicated by the decline in the net interest income. This highlights the need for the strategic pricing and the operational efficiency to maintain their profitability as well. The next one is the JSW Energy. Here, there is a stable net profit. The company has reported 2.3% Y-on-Y increase in their PAT amidst the slight revenue decline, indicates that JSW Energy is successfully managing its cost and maintaining operational efficiencies as well. Basically, this stability is crucial in the competitive energy market where pricing pressures are very common. There's a 10.4% decline in EBITDA, suggests that while profit are stable, operational challenges may be impacting overall earning, but the company may need to focus on optimizing its operational process to enhance their profitability. The next one which you need to look at is Petronet LNG, because there is a consistent performance. The 4% Y-on-Y increase in net profit highlight Petronet LNG resilience in the gas import sector despite the challenges posed by global market fluctuation as well. Basically, the stability is crucial for maintaining investor confidence in the company. Along with that, the second dope which you need to keep on your focus is the market position. As India's largest gas importer is the Petronet LNG, their ability to navigate pricing and supply chain challenge is indicative of its strong market position and the operational capabilities as well. The next stock which you need to look at is Nippon Life India AMC, because there is a 47.3% increase in the net profit reflects its successful investment strategies and growing market share in the asset management sector. This growth basically is bolstered by increased investor confidence and the focus on delivering strong returns. There is a second news in the Nippon Life AMC, that is they are declaring the interim dividend. The approval of an interim dividend of rupees 8 per share demonstrate the company's commitment of returning value to its shareholder, indicating healthy financial performance and cash flow. The next one is DCB Bank, because there is a healthy NII growth, basically 7% increase in the NIIs underscore DCB Bank effective lending strategies and focusing on enhancing profitability. This growth basically reflects a strong demand for credit and improved loan book quality. Also, the slight reduction in the net NPA to 1.17% increase. 1.17% indicates that the bank is effectively managing its risk exposure and maintaining a healthy balance sheet. Next one is Home First Finance, because there is a 24.1% increase in its profit coupled with 34.2% rise in the asset under management signifies a robust growth in the affordable housing segment. Basically, this trend highlights the company's ability to capitalize on market opportunities in a growing sector. Along with that, the 22.7% increase in the loan disbursement reflects strong demand for affordable housing loans, indicating effective outreach and the customer acquisition strategies as well. The next one which you need to look at is Cyient, because there is a stable performance. We can say 2% Y-on-Y increase in the net profit amidst steady revenue growth reflects Cyient resilience in the technology service sector, indicating effective management of the client relationship and the project delivery as well. The next stock which you need to look at is Glenmark Life Sciences, because there is a 20% decline in the net profit due to the temporary closure of its manufacturing facility, indicates vulnerabilities in the operational efficiency. The company may need to assess its production strategies and mitigate risk related to the manufacturing disruptions as well. The next one is the RR Kabel, because of the cost pressure impacting the profit. The significant decline in the profit despite a revenue increase, highlighting the challenges posed by rising raw cost material. The situation emphasizes the need of RR Kabel to optimize its cost structure and explore alternative sourcing strategies to enhance the profitability. Now, if you look at the overall, basically first, if we talk about the sector specific challenges and the opportunities, the financial result underscore the importance of understanding sector specific dynamics and the companies that effectively manage cost and to adapt the market condition are better position for sustainable growth. Now we are also focusing on the cost management. Many firms are prioritizing strategic cost management to contract rising operational expenses. Basically, this focus is crucial in maintaining profitability, especially in the industries facing significant cost pressure. So these are some of the stocks for today's trading session. Thank you. Bye-bye.